What is going on, investors? Hopefully you guys are doing well out there. Time to talk about Salesforce.com, ticker symbol CRM. The company reported their Q2 earnings earlier in the week. This stock is down over 5%. This was on Friday. And over the last year, the stock is down over 38%. And year to date, painting a similar story. Let's jump into those Q2 numbers because those came out on August 24th, which as of the recording of this video was about 4 days ago. You had revenue come in at $7.72 billion. We'll come over here and look at it. We'll take a look at the cash flows, take a look at how this revenue flowed into the profits over at CRM. That was still 21% growth year over year, which is phenomenal. We're seeing a lot of companies seeing their earnings growth really contract. Salesforce, at least in this quarter, holding up, because that is not the full story though. We did get Q3 guidance as well. We're expecting revenues between 7.8 up to really $7.82 billion. That would be a growth rate of about 14%. Consensus was closer to a shade over $8 billion. We also got full year guidance from Salesforce as well. Revenues expected to be right around $31 billion. That would represent about 17% year over year growth. Prior guidance from Salesforce was actually 31.7, so about $700 million higher on the high end, and consensus estimates was basically right there. So one thing to factor in with the guidance though is the fact that CRM and a lot of these big software and tech companies are these multinational companies. You do have some FX impact, okay? I've been hearing a lot of noise about this, and that certainly impacted CRM's results, okay? In the most recent quarter, it was about $250 million. For that upcoming Q3 quarter, we're expecting about $250 million worth of negative FX impact. For the full year, expected about $800 million, which is pretty significant on about $31 billion worth of revenue to have nearly $1 billion affected by that FX. Now, some investors might wipe that away and give this company a pass. You could look at all the companies that you're looking at that from a multinational perspective could wipe away this FX. I tell you what, folks, the company is going to point this out, and bullish investors will point this out now. A year from now, when this FX flips, or 18 months or 24 months from now, when all of a sudden it's a tailwind, guess what, folks? They won't mention it at all. Just understand that these things will even out in the long run. The most important thing to understand with Salesforce is it doesn't matter what's happening with FX. Wall Street is anticipating this one essentially being kind of a mid to low teens grower for the foreseeable future. So you have to ask yourself if the valuation over at Salesforce, which right now is sitting at about $165 billion, and we're looking at a forward price to earnings on this one north of about 34, and then you've got a price to sales sitting right about 5 or 6. You have to ask yourself, are you willing to pay a premium for a company that is going to be a mid-teens grower? I'll help you answer that question as we move through the rest of this video. Now, we have the statement of operations, or the profit and loss statement. We had that $7.7 billion worth of revenue. One thing that we love about Salesforce is the fact that these gross margins are succulent. Now, they did come in the most recent quarter. I'll show you down here when you come down to percentage of revenues. Those cost of revenues were actually 28% of revenues, where last year they were at 25. So we had a little bit of margin contraction when our total cost of revenues came in at $2.1 billion. So you take this 7.7, you minus off 2.1, and you get gross profit of about, we'll call that $5.6 billion. Last year we were about 4.7. Now, here is the problem I have always had with Salesforce.com is the fact that this reminds me a lot about Twitter, reminds me a lot about Block or Square, reminds me a lot of some other companies that we look at that do trade at a market premium despite not really generating significant profits. Because you notice here, your R&D spend went up over 30% to $1.3 billion. Last year, it was just at $1 billion. Now, marketing and sales went from 2.7 all the way up to 3.4. The company has done a nice job keeping G&A expenses intact, essentially flat year over year, right around $650 million in the most recent quarter. So you take $5.6 billion worth of gross profit. Now you have to, unfortunately, minus off 5.4 $4 billion worth of operating expenses, and you're left with essentially a rounding error on the income from operations at Salesforce at just $200 million. So off just $7.7 billion worth of revenue, you have just $200 million worth of income from operations. Last year, it was better, but still not impressive at $332 million. You see, for the last 6 months, holds true. You have just $200 million worth of operating profits off of over $15.1 billion worth of revenue. That is not good enough for a stock trading at a 6 times sales, 34 times PE, at least in my book. Now, if you're one of these investors out there that think they're going to be able to reaccelerate these revenues to 20, 30, 40% at some point, 30 and 40% might be a little bit over exaggeration, but if they can get back into the 20s, the low 20s on that revenue growth rate, and then maybe start printing more income from operations, that would paint a better story for paying a large multiple for this one. It's just not there. And then on top of that, we obviously have those FX headwinds, which who knows when those will shore up, but we also have a contraction of the guidance on a company that doesn't print a lot of operating income. And certainly when you come all the way down to net income, it might as well be zero. This company earning just 7 cents per share and 10 cents on the year. Again, off $15.1 billion worth of revenue, 96 million, which is nothing. It's a rounding error from a profit perspective. It's just not good enough when it comes to Salesforce. Now, when we come over to the balance sheet, it does give you a little bit of leeway. The company has plenty. I mean, we're talking about plenty of cash. They have plenty in receivables. The company does have some long-term debt. It looks like some has flipped over to the current side. So they're going to have to figure out this $1.1 billion. My guess is they'll just pull out of the pocket and pay that with cash. But the balance sheet is not bad over at Salesforce. Now, when it comes to cash flows, some investors might argue, well, they're paying a lot in stock-based compensation. They're doing all these different types of things. Maybe the cash flows paints a slightly more glorious story for Salesforce. So you pull down essentially zero on the net income, but it's 68 million. Last year was a little bit higher at $535 million. You see, for the 6-month period last year, you were at over $1 billion worth of net income. This year, just basically nothing. Now, we do get to add things like stock-based compensation at $851 million. We'll talk more about that here in a second. We've got some depreciation as well, coming in almost at $1 billion. You add back all these things in, and you're still at just $334 million worth of positive cash flows. Now, I do understand that for the 6 months, the company did print a shade over $4 billion worth of positive cash flow. That is, I believe, is because they have a lot of clients and customers that pay kind of yearly, and they're only able to recognize that cash when that month and that term expires. But on cash flows, you get to essentially recognize those receivables as they come in on like a yearly contract. So for the 6 months, paints a pretty good story, about $4 billion. But unfortunately, you can't annualize this number out. You can't times this number by 2, because you see in a quarter where they're not renewing a lot of yearly contracts, they have just $334 million worth of positive cash flow. Again, this is a company that trades at a premium from a price to earnings. It has a price to sales ratio that's relatively high as well. And you've got $165 billion market cap on a company that is essentially break even from an operating perspective. Now, moving through the rest of the cash flows, you see last year, I think they closed that Slack deal, because I see a massive $14 billion business combination that was last year. That is not present here. So we did less investing activities. And then finally on the financing activities, essentially nothing this year. Now, the company in their most recent press release did talk about how they have now a $10 billion share repurchase program. I didn't necessarily see any details on when it expired or how quickly they're going to try to execute that share buyback. But one thing to keep in mind now, for the last 6 months, the company has over $1.6 billion worth of stock-based compensation. That is a number I believe you can annualize out. That means we can times a 6 number by 2, and we get a number close to about, we'll call it $3.5 billion on that stock-based compensation run rate for this year. So in some ways, a $10 billion share buyback, which my guess is they'll implement, essentially, when we look at the balance sheet, they're not going to be able to just do 10 billion over the next 12 months. My guess is you're probably looking at 3 to 4 years on that $10 billion. You divide 10 by 3 or 4, and you're essentially just canceling out the stock-based compensation. So it'll essentially be neutral from a share dilution perspective. Again, not necessarily something that's bad for shareholders, but a little bit different when you see the gigantic buybacks that we have at Microsoft and Google and Apple. Those are going well over and above the stock-based compensation that those companies pay out. The 10 billion will essentially be neutral from a stock-based compensation for Salesforce. Now, when we come over here and look at this technical chart, doesn't actually look too bad. Now, some of the things we've identified in the past with Salesforce is this thing's been in a monster uptrend really for the last decade or so. It's gotten out over its skis a little bit. When this one was up over $200-300 per share, it was wildly overvalued. Now, we do have some areas of consolidation here right where the stock is sitting at. Certainly, the stock could retrace all the way back to this trend line, and that would take you from about a 165 share price. And again, depending on how quickly it got back to this trend line, it'd be in that 130, 140 range. But another thing I'm seeing from the very, very, very short term is you are making a series of higher lows here, and you are making some evidence of a little bit of higher highs as well. So from a technical perspective, in a shorter term perspective, you would not want Salesforce to go back below the lows that it made back in May of about $156, $157 per share. We're not far from that. We would expect from a technical perspective that Salesforce does find some footing at these levels. This from a trading perspective, buying at these levels, setting a stop underneath the previous lows, because I tell you what, folks, if you get below the previous lows here on CRM, much higher probability that you come back and back test all the way to this longer term trend line. So if I was in this one, even from a long perspective, if you want to buy this one on Monday or Tuesday or sometime over the next couple of weeks in this 150, 160 range, I would still have a stop loss maybe at the low end underneath 150, maybe at 149, just to protect yourself to the downside, because yes, if you do slice through that level, much higher probability going lower, but you should have some support here. This one could bounce from a shorter term perspective. You could play this one from the 160s up to the 180s, maybe as high as the 190s, but from a long-term perspective, considering you have Microsoft, you have Google, you have Apple, you have a number of different stocks out there that have far, far more cash flows, have a better buyback, pay a dividend in some cases, and have a much larger business from a revenue perspective. And not only that, have also very gigantic balance sheets with large cash positions. I would not want to pay a premium for a stock that essentially generates no profits. Okay, that's like paying a premium for Twitter. It's like paying a premium for Square. It's like paying a premium for any of these stocks that essentially break even or lose money. It just doesn't make sense. But again, that is just my opinion. If this stock can reaccelerate its revenue growth, maybe they can pull off a gigantic acquisition by leveraging the balance sheet or leveraging the stock. That is certainly possible. I just don't think there's a huge margin of safety. And if we have a much, much larger correction to come in the stock market, if liquidity gets drained, I tell you what, $165 billion company making essentially no profits, that will get cut in half very, very, very quickly. Not enough margin of safety for me and Salesforce, but I'd love to hear what you think about this one in the comments below. Hopefully you guys have a wonderful week. We'll be back again soon. Good luck with your investments.